Good morning, students. Today we have discussed about final accounts. Okay. Now I share the screen. What are the objectives of final accounts? We discuss one by one. The first one, the final accounts refer to the various accounts and statement that provides information relating to the progress of the business. Then again one, these are prepared from the trial balance. The entire information we are getting from trial balance. Okay. Then third one, they provide the following information. What are the informations? The profit earned or loss suffered by the business during a particular accounting period. What are the accounting period? 1st Jan to 31st March or 1st April to 31st March. Okay. The next one, the financial portion of the business. Then accounts and statement comprising final accounts. What are the accounts are prepared in the final account? The first of all, the final accounts with respect to a particular business are trading account, profit and loss account, and balance sheet. What is mean by trading account? The trading account and P&L together known as income statement as. Okay, then next one, income statements are the final summary of the accounts that affect the profit and loss portion of the business. Yes. Okay, the next one, what are the trading account? What is meant by trading account? It shows the overall result of a purchasing and selling of goods. Then it's include all direct expenses incurred in the business. Okay, in trading account, we are entry only direct expenses. Yes. Then next one, it's provide gross profit earned by the business. Total sales is greater than the total purchase. Yes. Then next one, we provide gross loss suffered by the business. The total sales is less than the total purchase. Yes. Okay. The next one, format of trading account. What is the format? The format is debit and credit side. Debit side, what are the entry? Opening stock, purchases, less purchase return, then all direct expenses. What are the direct expenses? Wages, customs and import duty, carriage expenses, royalty, then manufacturing expenses only for direct. Okay. The next one, packaging expenses. Yes, these things are debited in the trading account. Okay. Then next to credit side, what are entry made? Sales, then less sales return and closing stock. Yes. Okay. Finally, we get gross profit or gross loss. Yes. Then next one, what are the items? Debit side of trading accounts only. Carriage expenses. It's referred to the direct expenses that are incurred while transferring the purchased goods from vendors to the factory. These expenses are also known as freight, carriage, and cottage expenses. Okay. The next one, manufacturing expenses. It's referred to the expenses spent on gas, electricity, water, and fuel, which are required to run the factory. Okay. Then packaging expenses. It's referred to the amount spent in packaging the purchase of goods to bring them to the factory. Okay. And then credit side of the trading account in the name. What are the credit sides? Closing stock and sales. And then profit and loss account. The profit and loss account shows small incomes and direct expenses relating to the business. And direct expenses include those expenses such as administrative, selling and distribution expenses that are required for the operation of business. Then profit and loss account provide net earned or net loss suffered by the business. Then format of profit and loss account. What are items debited in the P&L account? First one, to gross loss any occurred debited to the profit and loss account, first item. Then second one, salary. Salary is a indirect expense. Right? Then rent, commission, advertisement, bad debts, discount, allowed. Okay. Then net profit. Then go to credit side. What are the items? Gross profit, interest received, commission received, with discount received. Okay. Totally we get profit or loss. That is net profit or net loss. Yes. The next one, the item on debit side of the profit and loss account, gross loss, it is transferred from the trading account. Then salaries. It's referred to the amount paid to the employees as their salaries. Then interest paid. It is referred to the amount paid as interest on loans, etc. Yes. Then commission paid. It referred to the amount paid as commission to the agent. That is sales commission. Then next one, trading expenses. That is trade expenses. It's referred to the amount spent on various number of small but important expenses related to the business. The next one, printing and stationery. It's indirect expenses. No. Then advertisement, bad debts, discount. Then items on credit side of P&L account, gross profit is transferred from trading account, and then interest received, commission received. Then finally, we get net profit or net loss. Yes. Then third account, balance sheet. Yes. We are prepare a trading account and then profit and loss account, and finally prepare balance sheet. Yes. The balance sheet, that is a financial statement that state the financial position of the business. It lists the assets and liability of a business on a particular date. Yes, the asset and liabilities on balance sheet are listed the following order: FD, liability side, and then asset side. What are the items in asset side and liability side? Then liability side, capital, then long-term borrowings, that means loans, etc. And then asset side, fixed assets, current asset, and then goodwill, they are come at asset side. Okay. Then meaning of adjustment. Those transactions will relate to the counting period for which final statements are being prepared, but are not included in the trial balance because the transactions have it not been recorded in the books of accounts are called adjustments. Yes. Okay. The list of, finally, we discuss the list of important adjustments: closing stock, outstanding expenses, prepaid expenses, accrued income, income received in advance, depreciation, interest on capital, interest on drawings, bad debts to be written off, and then provision for bad debts, and then provision for discount on debtors, goods withdrawn for domestic use, then goods used in business, then goods sent on sale or upward basis. Thus, these are the important adjustments.